FHA stands for Federal Housing Administration, which is essentially a government agency that backs/insures loans for people to buy principal residences. So if you're looking to buy a home and maybe you don't have a lot of money up front, that's one of the benefits to an FHA mortgage. Allows about 3.5% down payment. So if someone doesn't have a lot of money and they want to get into a new house, it's really great from that standpoint. A couple other benefits to the FHA loan program tends to be a little more liberal on what we call debt ratios. So maybe if you have that extra car payment that might make it tough to be able to be approved for a traditional conventional loan, an FHA loan might be an option available to you. The other benefit to FHA is because it's government backed, again, a little more loose on some of the lending. Maybe loose isn't a good word. A little bit more open as far as some of the lending guidelines with the program. So for example, if you've had maybe a difficult credit situation in the past, a foreclosure or a bankruptcy, a short sale, the wait period on an FHA loan is going to be a lot shorter than you might find on one of those conventional loan programs. So you can get into a home much more quickly after one of those events. Sometimes the mortgage insurance, which is going to be typically required anytime you put less than 20% down on a home, which is most people in America today, especially if they're looking to buy a first home, most people don't come in with 20%. If you have lower credit scores, the mortgage insurance that's required on the loan is a fixed amount. So whether you have a 780 credit score or a 640 credit score, it's the same mortgage insurance cost. And so that's one of the positives to the FHA program. It can be a little bit less costly on a monthly basis for the borrower as well. Currently, on an FHA loan, that mortgage insurance that I mentioned is for the life of the loan. So it's not something that currently FHA will allow you to get out of at some point in the future. Historically, after a certain period of time, that mortgage insurance would go away. Currently, it's for the life of the loan. So meaning until you either sell the house or refinance into a different loan, you're going to have that cost associated with your monthly payment. Another one of the positive aspects of the FHA mortgage is that it can be coupled with state down payment assistance programs. Different states have different programs available to help first-time home buyers, or maybe even just somebody who hasn't maybe been in the home buying process for a while, can help them to get in with a down payment assistance second mortgage, where it helps to cover that down payment. And a lot of times they're very, very favorable from an interest rate, and a lot of times even no payment. Sometimes they can be no interest and no payment. So you just want to kind of check with your loan officer on what might be available in the state that you reside. I think the other thing that people might also probably don't think about, but is a potential option for an FHA, is an FHA for refinancing the existing home that they already live in and that they intend to live in. Sometimes people might be in a situation where they have a first mortgage and maybe a second mortgage that would create a higher loan amount that might preclude them from being able to do a conventional mortgage. So one of the nice things about FHA is it's going to allow for higher loan amounts based on the value of your home than a traditional conventional mortgage. So you'd be able to take that first, take that second, combine them into a new loan at a potentially lower interest rate, save yourself some money. More importantly, you might be able to be reducing your loan balance more quickly. And generally speaking, the less you owe on your house, the better it is.